Alright, for this video I want to go over the IRS Form 8863 for education tax credits, and this is going to be for the 2023 tax year. So in this sample return, we've got a married couple filing a joint return, and they have one dependent who is a new student in college, and so they're going to claim the American Opportunity Tax Credit for their daughter. So we've got the full 8863 here. It's both pages, so we have page 1 and 2. Page 2 is part 3, so we'll go through the full 8863, and it is part of their full return. So we'll look at how these credits get reported on the various schedules, and then ultimately up to page 2 of the 1040. We've also got a sample 1098T here from the university, and then we've got the 8863 instructions up here, and specifically we can reference this table here, which is quite helpful. It shows the differences between the American Opportunity Credit and the Lifetime Learning Credit. The credit that we're going to look at for this video is, again, the American Opportunity Tax Credit. And then lastly here, just one slide covering some background on the credit and then some details on the fact pattern. So this credit, so the 8863, it's used to complete either of these two credits, right? So the AOTC or the Lifetime Learning. In this one, we're going to focus on the American Opportunity Tax Credit, which is generally the more favorable credit. So this credit covers the first 4 years of post-secondary education. So those first 4 years of college. Now, once the credit has been claimed for those 4 years, you can no longer claim the American Opportunity Credit. So if you get a 4-year degree and then you go back to college to pursue another 4-year degree, you can't claim the credit again for those additional 4 years if you've already used them for the first 4, right? Now, in order to claim this, the students have to be actually pursuing a degree and enrolled at least half-time. So there's a lot of students that are non-degree seeking, right? So you're just taking classes that aren't part of a full degree program. Those wouldn't qualify for this credit. Now, you could still claim the Lifetime Learning Credit. That would likely still qualify, but the American Opportunity Tax Credit only going to be allowed if you're pursuing a degree. Now, the maximum credit is $2,500 per student. So if your tuition is $10,000 a year, the maximum credit amount you're going to get is the $2,500 per student. Now, if you're a parent and you are filing a return and you have multiple dependents that are all in college and you're paying for those tuition costs, you can claim the credit of $2,500 on a per student basis. In contrast, the Lifetime Learning Credit is capped at the $2,000 on a per return basis. So it doesn't matter how many students you have, it's going to be limited on a per return basis. Now, as far as what qualifies as tuition, so if you're looking at your 1098T, we have amounts in box 1. So you're going to see things like tuition and enrollment fees. Now, other costs that aren't on the 1098T can still be eligible. So books and materials that are required, but they're not paid directly to the organization and reported on 1098T, those are still eligible costs. Now, if you prepay costs for the next year's semester, those could be deducted in the year you paid them. So if you pay for spring tuition in the fall, right, let's say in December, if it's for the spring semester, those can be deducted in the year that you paid them. Now, the total expenses that are ultimately reported on the 8863 are capped at $4,000. So when we get a look at the return, you'll notice that it doesn't matter, again, how much expenses are. You only report up to $4,000 on a per student basis. Now, how much of the credit are you actually going to get? So the $2,500 credit, it's generally going to be allowed, so this is for married filing joint, if your modified AGI is $160,000 or less. Now, if it's between $160,000 and $180,000, there's going to be a phase out. And that's what we're going to see in our example here. If it's over $180,000, you're not going to get any American Opportunity Tax Credit whatsoever. Right, and we'll see how that's illustrated in this example for Jacob and Susan. So in this fact pattern here, we have Jacob and Susan. They're married, filing a joint return, and their combined AGI is going to be $166,375. Now they have the daughter, Sarah, who's 18 years old and just started college in Florida, and she's full-time and she's pursuing a degree. Now, Jacob and Susan paid that first semester tuition, and the total cost was $8,500, and that was reported on the 1098-T in Box 1. So if they look at their 1098-T here, it was issued the student's name, ID number, name of the university, EIN, and then we see $8,500 up there for the payments received for qualified tuition and expenses. And Box 8 is checked that shows that she was at least a half-time student during the year. All right, so on the last side, okay, so they also paid for some other costs, $675, right? So books and other supplies. And then lastly here, they did not make any payments in 2023 for spring tuition. So the 2024 tuition, they made that payment in January 2024, right after the new year. All right, so let's have a look at the return and see how all this comes together. So page 1 of the 1040 here, we've got Jacob and Susan's joint return, married filing jointly, and they are claiming Sarah as a dependent. But they are checking the credit for other dependents box. They don't get the child tax credit for her because she is over 16, right? So it's under 17 in order to get to the CTC. She's 18 years old, so no CTC available, but you do get the credit for other dependents as so long as you meet those requirements. So we've got their wages, their investment income there, and so there we have their AGI of 166,375. Now, if we go to the 8863 here, so the 8863, page 1 is a summary. If you have more than one student being claimed, then you would attach multiple Part 3s, right? So as the note reminds you up here, you want to complete a separate Part 3 for each student, and you want to do the Part 3 for each student before coming back to Part 1. So Part 1 asks, after completing Part 3 for each student, enter the total of all amounts from Part 3. So we're going to go down to Part 3 first and fill that out for our student. So we've got Sarah, taxpayers, the student, her social security number, and then the information on the educational institution. So university name, address. Box 2, we did receive a 1098-T for 2023. Box 3, we did not receive any 2022 1098-T because this is her first year as a student. All right. Box 4, we enter the EIN for the university. That's on the 1098-T. Now on line 23, it starts asking us about the AOTC, right? So has this credit been claimed for any 4 prior years? No, right? So this is going to be the first year that we are claiming it. Was the student enrolled at least half-time for at least one academic period that began or is treated as having begun in 2023 at an eligible institution? Right, and so in our response is yes, right? We're at least half-time, we're enrolled, we are pursuing a degree program. All right, line 25, did the student complete the first 4 years before 2023? No, right? So this is our first degree for the student. We haven't already completed a bachelor's degree somewhere else. And line 26, was the student convicted before the end of the year of a felony drug possession? So the answer is no. Right. In our case, Sarah does not have a felony conviction. If she did, she would be ineligible for this credit. All right. So really important to get that right. Okay. So line 27 here. What are our adjusted qualified education expenses? Do not enter more than $4,000. Well, we've got the $8,500 in tuition. We had the $600 and change of other costs. So our total adjusted expenses is going to be that $4,000 cap. Line 28 asks us to subtract $2,000 from that total, right? And if 0 or less, enter 0. Multiply line 28 by 25%. So we've got $500. And then line 30 states that if line 28 is 0, enter the amount from line 27. Otherwise, add $2,000 to line 29 and enter the result here. So $2,500, so we've hit the limit. as far as the amount of the American Opportunity Tax Credit. All right, now line 31 is just going to be 0 for us, right? We're not claiming the LLC for this year. So we've got $2,500, and it asks us to report all of these amounts on part 1, line 1. So we scroll back up here. Part 1, line 1, $2,500. Now we start to enter the information on the taxpayer's income to figure out how much we can claim and what are any phase outs, right? So we've got the first is the filing threshold, right? So on line 2, $180,000 if married filing joint. So we've entered that on line 2. Line 3, we pull our adjusted gross income. So there's the $166,375. Subtract line 3 from line 2 gives us $13,625. And here's where the phase out calc starts to happen, right? So if married filing joint, enter $20,000. If single or head of household, enter $10,000. So remember, if it's under $160,000 of AGI, you basically get a full credit. If it's anything over $180,000, you get nothing. If it's between $160,000 and $180,000, you've got a phase out issue. So we've got the $20,000 listed there. Now it states if line 4 is equal to or more than line 5, enter 1 on line 6. If it's less, which is the case for us, divide line 4 by line 5 and enter the result as a decimal rounded to 3 places. So we've got 0.681. Now we take our $2,500 figure, multiply that by 0.681, and we're left with $1,703. So we've got the line 7 figure on there. Now line 8, the refundable portion of the credit is line 7 times 40% gives us $681. And so this is the refundable piece of the American Opportunity Tax Credit, which is entered on the 1040 line 29. So if we go back to page 2 of the 1040, line 29, this is the refundable piece of the credit, 8863 line 8, $681. All right? So that's the refundable piece, but we still have to calculate the amount of the non-refundable credit that's reported up here. So if I go back to the 8863, now we're working in part 2. Subtract line 8 from line 7 and enter the total here and on line 2 of the credit limit worksheet. So we've got line 8, 681 from line 7 of 1703 leaves us a difference of $1,022. Now, the credit limit worksheet is testing the non-refundable credit against how much tax we actually have. So first, if we look at page 2 of our 1040, the amount of tax that we have available to offset is $21,057, okay? So if we look at our credit limit worksheet here, the $21,057 is our starting point from line 18 of the 1040. And the non-refundable piece of the American Opportunity Credit is calculated within these line items here. So we have the amount from line 9, which is the $1,022 figure. So we've got $1,022 from the non-refundable American Opportunity Credit. We subtract line 9 from line 8. If 0 or less, enter 0. And then enter the smaller of line 10 or line 11, right? So in this case, line 12, the figure is $1,022. So this is the non-refundable American Opportunity Credit amount that's available. And so here the credit worksheet prompts us to, on line 13, add line 9 to line 12, enter this amount on line 19 of the 8863. So if we look at our 8863, it is now confirmed for us that, okay, we're going to be able to claim $1,022 of the non-refundable American Opportunity Credit. Now, the reason why all of these in the middle are blank has to do with the non-refundable lifetime learning credit. Right, and so in our case, we're not claiming any lifetime learning credit, so we can skip those line items, and we skip them on the credit limit worksheet as well. But I'll have a different video that covers a situation where you have both, right? So you've got the AOTC and the LLC and see how these interact. But we've got, so $1,022 is available. So if we go back up to page 2 of our 1040, we can see that $1,022 is ultimately flowing through, and that comes from Schedule 3. So Schedule 3, we have the additional credits and payments, and on line 3, we've got our education credits from the 8863, line 19. So again, that all flows up through here. So we've got $1,022 in non-refundable portion of the AOTC, and then the refundable portion of the AOTC down here. So if I add up 1,022, 681, we've got 1,703. So of the $2,500 credit, we were able to get $1,703 of a benefit. And that's because of the phase out again. So the 8863 here, because our income was between 160 and 180, we've got to have the phase out, which was this percentage. All right, so that covers it for this video. I hope that was helpful. If you have any questions, feel free to leave a comment below, and I look forward to seeing you on the next one. Thanks.